Good morning. It's Harvey Jackson. Just going to go through a couple of slides that I was looking at last little while. First off, just the oil comparisons of all veg oils kind of out there and its makeup. And you can see here that saturated fat on the palm oil or palm kernel oil is quite high. It's actually almost identical to beef fat. And then you can see way down here, canola is only at 7%. Another one that's actually close to that is safflower and then hazelnut as well. So the healthier oils, less saturated fats, with the red on the right hand side of the scale. So where is this oil? And they're going to maybe show a couple different slides here as well, and maybe just a different visualization for you. But soybean oil making up about 29%, palm oil making up about 40% of the world oil, and then you got the kernel palm oil in there as well. So you call it 45 kind of thing, and then rapeseed oil around 11% in this visualization. And you go over here and you can see it maybe in a different uh, uh, share of vegetable oil land use. So you got palm oil, it's only 6% of the land, but it's actually 30%, 36% of the production. So it's actually a very productive uh, uh, veg oil to be produced. You got 40% of the land uh, producing 26% of the production for the veg oil, and rape and canola and mustard, 12% of land, 12% of the production, and then so far. So you can see that it's a equal use of land versus production. Um, and here's just maybe a different year, different people looking at it, but this is bio-based diesel stocks, and soybean oil makes up about 44% of it in US, and this is a couple of years old. I don't have the citing of it, but and corn oil, canola only makes up 5%, grease, tallow, and other. So almost half of it is made up of soybean oil in 22. And then if you flip over to Germany, it's like 58% rapeseed oil, and then using the other oils as well. So there's differences just in time of actually producing this industrial oil. Feedstocks. This is from the from government sources, but here you can see feedstock used for global biomass based diesel production, just for the diesel fuel at all, or as a whole. And you can see that there's a growing need or growing use of these waste feedstocks, and it's increased quite a bit, and still on the increase, of course, as well. Where you can see that other veg oil and rapeseed has actually been fairly consistent. Same with soybean growing and crude palm oil also growing as well. Just a different look at this. Renewable diesel production has ramped up a lot in the recent years, and the percent is at close to between 45 to 50% of the share of the soybean oil making up the uh, oil used for biofuel. Here's the countries. You can see that the world biodiesel production is still due to increase and increasing at a pretty good pace, and yet you can see the consumption or the actual trade is minimal at best, and you can see that. So you can see European Union largest, Brazil, and then the United States the next, and then Brazil, Indonesia, Argentina make up the rest in the consumption side, and production is almost identical with a little wee bit of the trade actually going back and forth. So who makes up these countries that actually have the feedstock of canola? Canada is number one. This is the USDA data that came out last week, and not to say that it's accurate, but you can see that the global production is at the 82 to 86%, which is pretty high, uh, and basically flatlining. But Europe actually had, and they pointed out that it's decreasing its production. Canada, it's actually suggesting that it's holding its production, and then China producing some stocks, but maybe not enough, not enough for their populous country. Let's just go through some of the numbers as we see them. Canola was up $4. Rapeseed is up 50 cents. Soybean oil basically flat. Palm oil is down 38 ringgit. Crude uh, crude oil is up again, and soybeans are flat, and the wheats were down anywhere from 8 to 9 cents. Uh, and the Canadian dollar is just trading basically flat there as well. So canola, if we just look at it quickly here, we are if I just do a retracement value on the last move here, just to get an indication of what's going on. You can see that slow stochastics and stochastic RSI is actually going negative here, and as you can see here, that you can stay negative for quite some time. So, and you can see that that's basically a range there, just constantly staying down. So we could actually get pushed down farther. Um, so this is just a different way of showing this. So this is your R or your retracement value going down here. This is the retracement looking for where it can go up, and some of these lines, the 78.6 and the 38.2, line up pretty well, which would both be a positive sign to get above that number. And we're looking at the 570-ish number that we need to get above. Rapeseed doesn't have quite the same story. But it's been basically going more sideways and still slightly down the last few days here as well. But what that has done is actually push this rapeseed priced in Canadian dollars up to 145. Differences between the two country or two products in Europe versus the Canadian price in Canada. Soybean oil, some of the same kind of trade here. What I do want to point out is you've got your moving averages crossing here. This is probably not a good sign, uh, but we'll see if we can actually hold out here. We do want this market to go up, of course, and that 40 cents is pretty important to point out as it lines up with this area here, 40 and 41 cents. Here's your crude palm oil. Same kind of trend. The veg oil is actually taking a little bit of a push down here. So wheat. So I put some green on the chart here, and it's still pretty green. So if we were to draw a line here, we need to be kind of try to stay above that support line. And there's a crossover of your 10-day and your 50-day moving average. That's a positive sign there as well. And we could see values getting back up into here, and which is the 600 or $6.50 range is where we need to get to that 38.2 retracement, which is an important retracement value. And you can see that it's actually made some tops over here as well. Oh. And here's wheat here as well, and it's got the same kind of trend. This is Chicago wheat, and the Kansas wheat is a very similar trend as well. Here's corn, and they're all showing this crossover where the 10-day is crossing over the 50-day, so that's a positive sign for possible upside. Not saying that it will, but it's adding some conviction with some of the technicals on the chart. Next report, whether it's going to be impactful or not, is this model-based information from StatsCan that's probably out here right away. And we'll see if it's worth talking about tomorrow and see if it's going to affect the trade today.